Ladies and gentlemen, welcome back to the channel. Oh boy, do I have a video for you today. We're going to be going over my open, honest, and transparent opinions and expectations around Tesla stock this year and next year. Just since the start of 2024, to put this into perspective, we started 2024 with the expectation that we're going to get 7 rate cuts from the Fed. Now, whether that was right to begin with or wrong to begin with, you can make an argument for that. That's not what I'm trying to do. The fact of the matter, things have changed. We've went from pricing in 7 rate cuts to pricing in currently 3 rate cuts with a good chance that we don't get any rate cuts in 2024. So the end of 2024, really the second half of 2024, was previously 2 months ago setting up to be a pretty good time for Tesla. As rates go lower, Tesla should be able to raise prices, sell more vehicles, so on and so forth. That would be very positive. Now we're not really in that situation, but there's always a chance that we go back to that situation. It really depends on the economy. So here in this video, I want to give you my expectations around Tesla stock, what I think EPS will be, what I think multiples will be, where I think Tesla stock will be at the end of this year and the end of next year. Beyond that, I do want to do something pretty special that I don't think enough people do this, and me included. This is the first time I'm doing this here on YouTube. I do want to share with you my YouTube earnings. I think it's something every time I see other individuals that make videos like Meet Kevin back in 2021 when investing became popular. He shared his earnings, and he was making like $500,000 a month. Now, I'm nowhere close to that. Not even in the same ballpark, okay? I'm in minor leagues. But I do think, at least from my perspective, when I seen him make that video, it added a lot more respect to what he was doing at the time, to be open, honest, and transparent. And that's what I strive to do for you guys as well. We know what Elon makes every year. Well, doesn't make. We know what his comp package is. We know what McDonald's CEO makes. We know what Ford CEO makes, Lucid CEO. I think you should know what I make or what other people make. And hopefully this is just transparent. But that will be towards the end of this video. So if you don't care about anything Tesla we're going to talk about in the video, I mean, just skip to the end to see if you're curious what I've made on YouTube here on this channel. And I do want to kind of explain that a little bit more. And this was truly brought about based on some of your guys' comments on one of the last videos. It's titled, "Finally Really Good News for Tesla Stock, Breaking News." And this individual, thank you for this. I read all these comments. I respond to as many as possible. He says, people need to appreciate this dude. He makes these videos every day in exchange for nothing. He researches news for us and puts it in a video every day. There was 23 likes, excluding mine, on this as well. And, some people posted that YouTube obviously pays, and YouTube does pay, but I really just would like to show you guys what it does pay. And this individual says, "I'm riding the hype wave," and I mean, I don't know if anyone has looked at Tesla stock recently, but there's no hype there. So I'm not angry or anything like that. I think this is healthy for you guys to have this transparent, open kind of look into maybe people that you watch every day, like myself. And hopefully you find value out of this. So first up, let's start with Tesla. And I'll try to keep this video as short, sweet as possible. I'll try not to rant as much and just give you the information that you need to know. So first off, I think we started on a strong note. Expectations have dramatically shifted, going from 7 rate cuts to 3 rate cuts now, which is currently priced in. But there's a good chance that we don't get any rate cuts in 2024, or maybe 1. If we get 1 rate cut, Tesla's not going to be able to do much with that. Okay, my original thesis, why I was very bullish on Tesla for 2024, for this year specifically, was we're going to get 7 rate cuts. That's 1.5% worth of rate cuts. That's going to drop people's monthly payments, the financing cost. And that means Tesla can start to incrementally raise prices and keep, cost monthly payments the same, or even lower them. For an example, if let's say a $30,000 vehicle, if you have a 3% interest rate, Well, what are you paying per year in interest? It's pretty simple. What's 3% of $30,000? Well, it's $1,000 a year. Okay, that is roughly 3% of 30,000. Okay, so if 10-year treasury yields start to fall and the Fed starts to cut rates, then maybe that would fall to like 2.5% or 2%. In that case, that would save you hundreds of dollars of interest a month. Now, I know these numbers are higher. It's like 6.5%. But just to kind of put it into perspective, you will save a lot of money on your monthly payment if you were to get a Tesla a year or two from now when rates are lower, right? That means Tesla can start to raise prices and even lower your payment from today's level. Now, obviously, you guys can refinance if you already bought your Tesla at high rates. Doesn't matter. But Tesla could have raised prices as we got more rate cuts, especially if we got 7 rate cuts. Tesla could have started raising prices across the board for all their vehicles, thousands of dollars. Elon Musk has made it very clear in the last 3 or 4 earnings calls now. He talks about this basically every single call. He says it's all about the monthly payment. So if you were to finance a $100,000 vehicle, but it cost you $500 a month, fine. If you were to finance a $30,000 vehicle and it costs you $500 a month, fine. People don't matter what or care. It doesn't matter what the purchase price is. It matters what the monthly payment is. And the monthly payment has skyrocketed as rates have also skyrocketed. And that means Tesla's had to lower their prices, because if a Tesla was still $50,000 or $60,000 like it was in 2021 and 2022, you would see just people unable to afford Teslas. So it's put Tesla in a really bad spot. That's why they've had to keep cutting prices. Margins have eroded. You kind of understand the whole situation, what's happened over the past 2 years or so. I initially thought that was going to get better as we were going to get a lot of rate cuts. Well, we've seen inflation come in hotter than expected every single inflation report in 2024, whether it's CPI, PPI, or PCE. All of the important inflation metrics, they're all starting to ramp up again. This actually opens the door for the Fed to put back on the table a rate hike. And I think that could come next week. And that really sours the mood around Tesla. And it really extends the time frame in which we could start to see Tesla actually raising prices to a large degree. I think that still happens down the line, but I think it's going to take longer now. Now, in terms of Tesla stock, so all of this has become a problem for Tesla, and it's made Tesla really an easy short opportunity. And we'll go over the short position that we're currently seeing in Tesla, but you've definitely seen a lot of shorts piling into the company, and it seems like the popular thing right now is to be negative on Tesla. And I do think based on all of this negativity, there's a lot of upcoming catalysts and events that are not priced into Tesla stock at all. Tesla's margins improving from here. That's not priced in at all. If that happens, that's great news. We just got news here in the past 12, 24 hours or so that Tesla's raising prices of the Model Y in the US, in Europe, basically everywhere besides China, we've heard so far. So that's really good news. Is that going to be accretive to margins? I don't know. Is that going to preserve margins at the bare minimum? That's going to help preserve margins if you're seeing the, production costs rising, lithium costs have started to rise a little bit, or if you are seeing some of the wage increases that Tesla's had to pay some of their workers. Maybe that's being offset by the price increase of the Model Y. Maybe it's not helping margins, but it definitely can't be hurting margins, that's for sure. Now, some of these catalysts that I still have pulled up here is a better selling of the Model 3 in the US. We don't have any color or clarity on US deliveries, so it's kind of the big wild card when we get the delivery number every single quarter. So I think the Model 3 will sell better than expected in the US, the refresh Model 3. I have a smoother Cybertruck ramp. We've seen hundreds of Cybertrucks start to roll out of Giga, Texas. There's about 25,000 Cybertrucks expected to be sold this year. If that could hit 40 or 50,000, that would obviously be better than expected. And I don't think that's priced into Tesla stock. You do have an overall halo effect, and I do think that is starting to actually materialize. The first innings of this halo effect, if you think like a baseball game, like 9 innings or whatever, you're like inning one for this halo effect. I think that is a big upside potential catalyst that is not priced in at all. I have a faster than expected Model 2 instead of the second half of 2025. Maybe that comes the first half of 2025. You have to imagine that is front and center on Tesla's to-do list, is getting that Model 2 out. I also have Tesla raising prices later in 2024, although that's still possible. It does look like it's getting pushed back a little bit more, and I think that's more of a 2025 event now. I have FSD entering Europe and China as two other catalysts that should be coming in 2024. Tesla talking positive on AI. Every earnings call we've gotten, it's been a disaster. It's been very gloomy and doomy. If that could start to change, that would be positive for Tesla stock. If Tesla came out and provided guidance, that would be very positive right now to get a little bit of confidence from the Tesla team. And then you have Elon's comp package with high market cap tiers like 2 trillion, 3 trillion, 5 trillion, 10 trillion. That would also be positive, and you would secure Elon as the CEO likely into 2030, 2035, or 2040. These are all catalysts I put together in like 5 minutes that I think could logically happen in 2024 that are not priced into the stock. So you're getting a massive discount on Tesla as of right now. The question is, what do the fundamentals look like in 2024? Some individuals like Adam Jonas have said if there was any year for Tesla to lose money, it would be this year. Adam Jonas expects around $84 million of free cash flow, whereas last year was about $4.3 billion of free cash flow. Okay, that's insane. To expect that kind of drop, I don't think that's going to happen. Now, if we just do some simple freaking math here. Okay, let's say, here's where numbers are going to vary a little bit. Let's say Tesla does 2.1 million deliveries. Let's say Tesla's average selling price is around $44,000 or so. That would be the selling price actually coming down a little bit. Average selling price of, boom, you're going to bring in $92 billion worth of revenue. This is not even including the energy business, which is likely to bring in 15 or so billion. Add services to that, that could be another 10 billion or so. Let's just do that. Add 15 billion for projected energy, plus definitely didn't do that right. Plus 15 billion for energy, plus another 10 billion or so for services. Services tend to stay pretty much the same. That would be Tesla bringing in about 117 billion of revenue. That would be roughly like 12 to 15% year over year growth. But in this market, it really depends on profitability. Let's say with everything included, Tesla can bring in a net margin of about 12%. Last quarter's net margin was around 11.3%. So I'm considering a little bit of margin improvement for 2024. So let's go ahead and times that by 12%. That would be $14 billion of profits. Tesla has already guided for 10 billion of capex. So that means that's already out the window. So you could be looking at about $4 billion attributable to shareholders on this metric. Now, again, that's not great. Definitely not fantastic. Okay, if you divide this by like 3.3 billion shares outstanding, you're looking at like $1.23, $1.24 of EPS. I think these are very conservative numbers, and Adam Jonas just came out with an EPS estimate of, potentially negative, right? Less than $1 per share. Even if Tesla did $1.23 per share of EPS, that would be seen as very much a positive. Now, if Tesla cuts back on some of that, R&D spending, some of that CapEx spending, that could, boost this number. But I think even in a more, super conservative estimate, it's still higher than where some people are at, like Adam Jonas. But let's just go with the consensus view for EPS. The consensus view on Wall Street is about $3.07 of EPS for 2024, and that's likely pretty fair. You could probably come in at about $3.50 per share or so. Maybe that's more accurate. Last year's EPS was $3.67 for the entire year, so maybe you're roughly flat little bit lower on EPS for the full year, not a huge deal. Well, if we actually take a look at what Tesla is trading at right now at $164 divided by 3.50, Tesla's trading at a PE multiple of about 46. Now, that's for this year's number. Let's consider next year's number. And that's what Wall Street does. They don't look at this year's number. They're like, what's 2025 earnings going to look like? And I think that's where things have a lot of upside for improvement. If we just go here and we go to Wall Street Journal and Tesla and figure out EPS estimates for 2025. And let's see, 2025 EPS is expected around $4.06 per share. I'm expecting by 2025, after the presidential election, whether we're in a recession or not, by that time, we should either be in a recession by 2025 after the election, or we should be really conquering inflation by that point. So I think for whatever reason or another, we probably do get a ton of rate cuts in 2025. Now take a look at this. EPS estimates for 2025 3 months ago were $5.37 per share. Today they're $4.06 per share. In all reality, maybe the estimates shouldn't have went up, but they shouldn't have fallen the way that they have as well. I mean, really? That doesn't make sense. Now, Tesla raising price on the Model Y, that's likely to have a positive effect to 2025 EPS. But again, back to the argument. When the Fed lowers rates, Tesla is going to be able to raise prices. So even if we go with the $5.37 argument and assign it the same PE as Tesla is trading at today, you would come to a Tesla stock price roughly by the end of this year, if not the start of 2025, around, let's see, $251 and some change. That would be if the multiple does not expand at all. Okay. Pretty interesting. Now, if Tesla stock is trading at $164, divide that by, let's say, 2025 EPS prior estimates, 3 months ago estimates, Tesla stock would be trading at about 30.5 times. That's not to mention if profitability does improve. Let's say we do have $6 of EPS for 2025. Then you're trading at 27.33 times. And it's all going to change to the focus of being the next gen vehicle. Now, there's a lot of different levers that Tesla can pull from now until then. Lowering the price of FSD could be really good for margins to get a higher take rate associated with FSD, because FSD is basically just a software update. The vehicles come with the hardware for FSD anyway, so it's like 100% gross margins, because Tesla's already recognizing the cost of putting the FSD related hardware into the vehicle. So there's a lot of different levers that Tesla could ultimately pull in this regard. What do I think is fair? Well, Tesla was just trading at about a 65 times multiple. If we can get inflation down, or the economy does start to look worse from here, I think Tesla's priced for that already, number one. Okay, but the multiple has went from 65 or so down to about 68 or 46.85. So the multiple recently was about 65 times 3 months ago's EPS estimate of $3.85. You had Tesla at about $250 per share. $250 per share. Now, could this improve? Sure. But what's a good base case from here? A good base case from here, if you consider the Fed may have to raise rates again, you consider all of these other headwinds, Tesla stock $250 by the end of this year, not a terrible number considering the stock's $164 today. That would mean you would make about $86.25 per share for every share that you own. I don't think anyone's going to argue with that. If someone's mad Tesla is going to be $250 by the end of this year and not $400, I think that's kind of crazy. That's more of a base case scenario. Now, a better case scenario would be multiples expanding, Maybe the economy is doing okay. Inflation does plummet. The Fed gives us 5 rate cuts, 4 rate cuts, something along those lines. And let's say the EPS estimate turns into about $4 per share for whatever reason that is. Who knows? There's a lot of levers that Tesla can pull. But let's say $4 times 70 as the multiple improves, then you're about 280. I think that's a better case scenario. But again, that's fundamentals. Momentum drives stocks in the very near term. Momentum used to be great to the upside for Tesla. Now it's to the downside. Okay, here's the good part. Here's the really good part. For individuals that are longer term investors that have a longer term time horizon, and you're looking at 2025, things get a little bit more exciting in 2025. If Wall Street thinks the EPS for 2025 is going to be $4.06 per share, you can probably add about a 20-30% premium to that. So $4.06 per share times, let's say, 0.25% to go in the middle. You can add about $1.02 to Wall Street's EPS estimate. That's my consensus view. That'd be about $5.08 for EPS for next year. Now, the multiple will likely expand heading into next year, and especially as we get into next year, heading into the second half of the year, as we get closer to the launch of the Model 2. That's going to be seen as the next growth factor for Tesla. And more vehicles, more potential FSD sales, right? You kind of understand. And hopefully the margins for the Model 2 are really good as well. That could bring in a lot higher EPS. But let's just consider 2025 EPS, $5.07 per share, about 25 times higher than Wall Street's estimate, when in all reality, 3 months ago, the EPS estimate for 2025 was $5.37 per share. Nonetheless, the multiple was just 65 not that long ago. So a base case assumption could be 65 for next year as well. That's kind of the way that I'm looking at it. If we start to get some rate cuts, that would put the stock at about $330 per share. Now, in a better case scenario, consumers doing well, Tesla is beating estimates, everything's going just fine for Tesla. $5.08 per share times about 75, then you're about 381. Now you're getting close to all-time highs. I don't think these are two unrealistic numbers. And, especially, again, momentum is powerful to the upside, but it's also powerful to the downside. And we are in a phase of seeing momentum to the downside. So, again, just to summarize this, my kind of base case estimate by the end of this year is about 250. You could be as high as about 300, just depending on what multiple you assign, on what EPS you assign. Remember, we don't have guidance from Tesla, so we have no idea what to actually expect. We have no idea. Deliveries could come in at 2.4 million, or deliveries could come in at 1.8 million and be flat year over year. You just really have no idea. And that's a bit of the problem. We don't have guidance from Tesla. Next year looks a lot more optimistic, as we either are in a recession and rates are dramatically lower, or we've conquered inflation. Hopefully by 2025, we have fully conquered inflation or entered in a recession and conquered inflation that way. But nonetheless, should mean multiple expansion as we do head into the next wave of growth for Tesla, which could easily put Tesla stock at all-time highs or close to it coming next year. Now, here in the near term, we're going to have some pretty volatile events coming this upcoming week. As I've said previously, I think we're going to get pretty much rug pulled by the Fed. There is a 0% chance that we could get a rate hike in 2024. I think the Fed has to put that back on the table if inflation continues to come in hot for the next month or two. Then I think you'd seriously be looking at the chance of a rate hike. And I think the Fed's job will be to communicate that to the markets, that there is still a chance the Fed will raise rates. I think that ultimately gives Tesla stock and other stocks more downside. Even though Tesla just raised prices on the Model Y, the Fed could really dampen the mood for the markets. And that is what my expectation is in this upcoming week. We have the NVIDIA GTC conference or whatnot. So I do think Tesla stock could go lower from here, down to about 150 is my base case assumption. Some people calling for like 130, I think is a lot less likely. To get down to 130 from here, that would still be downside of about 20%. So that's still a lot. To get down to like 120, that's downside of 26.5%. That would be, I mean, Tesla's already down like 35% year to date or some crazy number like that. You would be down like 50+% if you got down to like 120. I don't think that's going to happen, so I think you're closer to a bottom than not, but there's still a lot of potential downside and volatility that can come in our markets. Now, like we've seen on Friday, the NASDAQ was really the weak spot. Big tech was the weak spot, whereas the Russell did well. Tesla was actually in the green. So I think if you get a full-blown correction, Tesla stock's going to fall, but it doesn't necessarily have to. I would just expect it to. And a lot of people do forget that you want to be buying a stock when people are fearful, when expectations are low. As long as you believe in the company, that's what you want to do. And that's personally what I'm doing. So again, just to kind of recap this segment on Tesla before we get into the other topics here in this video. I think by the end of this year, 250, a pretty decent level to be targeting. As high as 300 could be in the cards if things go well. For next year, things get a lot more exciting with a base case around 380, just depending on, by then, my assumption is we're going to be in a recession. Rates are going to be a lot lower. Tesla services the higher income individual anyways, so they should be okay. And investors are going to be focusing on the next wave of growth for Tesla. Or by 2025, well, you're going to be in a recession, rates are going to be lower anyways, or you're going to have crushed inflation and rates are going to be lower anyways. So I think 2025 is going to be lower, especially if T-Man gets in office. Probably one of the first things he's going to do is call on the Fed, basically bully the Fed into lowering rates. So we'll see what ultimately happens there, but I do think 380 to all-time highs is what I'm expecting for 2025. Okay, so here is what a lot of people have likely been waiting for. Here is the analytics page. So I commented on someone else's comment that in the last video, the comment that I showed you in the beginning of this video. I'm not going to go back to it, but thank you guys for actually being supportive down in the comment section, because, I mean, most months you're making less than the average salary in the US, okay? So what this is right here is it's taking in your last 28 days of, or last month or so, 28 days of earnings. And it's basically forecasting what the month is going to look like based on current trends. Now, a lot of days it's like 10, 15, 20,000 views. Anything above 20,000 views is a pretty good day. Now, typically the best months of earnings are like November, December, well, really September, October, November, December, towards the end of the year. And then the start of a new year is terrible. Okay, so the numbers for this month, you're starting to get back to something normal. And sometimes things are just strange. Like yesterday had 14,000 views, or the 14th had 14,686 views and somehow made 270. So I don't know if ad revenue is starting to come back, but a lot of days it's like $80 to $120. Some days can be like 160, but that's kind of the average, right? 80 to like 120. And some days, again, are a little bit higher. The last couple of days have been definitely a little bit higher. But that's the forecasted 3,425 for the next couple of days. Now, in the lifetime of the channel has made $44,591. And you can see just kind of the drop off that you tend to see. 2024, the channel has made $9,231 so far. In 2023, the channel made $34,515. Less than the average U.S. salary, around $44,000. I'm not complaining. You just have to love doing this because it's a lot of work. And if you don't love doing it, people stop doing it. And that's why some people, might make a video or two and just give up. Now, January tends to be a pretty rough month. Actually, it wasn't terrible. 30% less than December. Made about $3,800 that month. Let's see, 90 days. I wish there was an easier way to pull up 2023 on a monthly basis. Let's see, February was about 3,500. Okay, so this makes it a little bit easier, okay? So November was the best month, $6,042, and I think there was a lot of things going in favor for Tesla at the time that helped boost that number. December, 5,400. January, 3,800. February, 3,500. These months just tend to be rough, okay? They just tend to be really rough. But, I mean, I really can't complain. Really can't complain. I love doing this, and it does pay. Do I only do this? No, I work in a restaurant on the weekend sometimes. I do marketing for companies in my area here in Michigan. I have a real estate license. In all transparency, I only do like 3 or 4 transactions a year. Tend to just do transactions for people that I know. Not really looking to go get other clients at this point. And I do own 3 doors worth of rental properties, right? So there's a lot of things that I do besides this, but it's not terrible, okay? So hopefully this provided a little bit more color for you guys. You know, just my honest opinion, you really have to love making videos or it's not worth it unless you are some kind of big channel that makes a lot of money each and every single month. And I turned down a lot of money. This is the email associated with this YouTube account. And I mean, I get promotions all the time trying to promote sometimes just outright sketchy stuff, right? Super sketchy stuff sometimes. And it's just not even worth my time. I don't even open these emails, and some of these can pay $3,000 to $5,000 a piece, a whole month in just one of these promotions. All kinds of different stuff. The only emails that I actually open are like emails from you guys, like the viewer. Out of all these emails, that's the only one that I opened and actually responded to. Yeah, so I turned down a lot more money than not, and Moo is just aggressive with their promotions. But yeah, let me know what you guys think about this down below in the comment section. Hit the like button, subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.